Australian aged care sector plays a vital role in the nation's healthcare system. As such, it is a heavily regulated industry, reliant on government funding and policy. Over the last decade, the industry has undergone significant changes, driven by demographic shifts, policy reforms, and increasing scrutiny over the quality of care. The rising regulatory burden has driven up the cost of doing business, creating financial instability for operators. Despite the growing demand for services, the increasing regulation and lack of government funding has led to an industry-wide capital strike by aged care operators. Regis Healthcare is one of Australia's largest aged care providers, with approximately 7% market share. In 2021, they started divesting underperforming assets as part of a broader restructuring effort to focus on more profitable and higher quality facilities. The strategy was in response to the challenges facing the industry. But as a result, today, the company has curated a high-quality portfolio. The capital strike created significant imbalance in the supply and demand for aged care beds. By 2022, building approvals for new aged care facility reached a decade low. This, coupled with closures due to the financial instability, meant the sector was facing a critical shortage of aged care beds. On the demand side, the long-term thematic of an ageing population continued to play out. The number of people aged 80 years and over is increasing rapidly. In 2023, 40,000 additional Australians entered the 80-plus age cohort, with that number expected to rise to 90,000 by 2027 and remain at these elevated levels for the next decade. These demographic shifts have placed immense pressure on an already struggling aged care system. This supply-demand dynamic has led to an overhaul of the funding model, aimed at improving the financial sustainability of the sector and encourage capital back into the sector. The new funding reform announced in late 2024 has allowed operators to charge more for their services and is a step closer to encouraging operators to reinvest in existing infrastructure and build new capacity. Recognising the growing demand for aged care services and ongoing discussions about industry-wide reforms, Regis Healthcare has been focused on portfolio growth and quality, having acquired more than 600 beds in 2024. They have significant opportunity for both greenfield and brownfield developments, benefiting both capital providers and aged care residents. Further to this, the industry is highly fragmented, allowing for consolidation. The larger, more established players like Regis Healthcare can achieve material profitability advantages over smaller operators, who may struggle to adapt to increasing regulatory burdens. The company is in a net cash position, which gives them more financial flexibility to continue deploying capital into the sector where demand for aged care services continues to outpace supply. Looking ahead, Regis Healthcare is well placed to benefit from strong fundamentals underpinning the aged care sector.